Hey, I'm Lakeisha, a former engineering manager turned day trader, 12-year investor, and Yale MBA. And today we're gonna talk about how to find the best companies to invest in. And if you're new here, go ahead and hit that like button and also the subscribe button so that way you don't miss any videos that I may post on this topic. So anyway, today we're gonna talk about how to find the best companies. Now we know about some of the really big companies like Apple, Google, whoever, and I want you to be able to find other companies that are similar or in the same space in order for you to take advantage, because maybe those companies are growing faster than some of these big companies and you definitely want to be at the bottom and ride the wave up. So let's go ahead and go to my computer. Okay, so this is my favorite tool. It is called Finviz, and basically it gives you this beautiful, beautiful map. All you gotta do is go to finviz.com and then click on maps, and then it will take you to this amazing grid. And I really like it because it breaks down all of these different companies inside of the different sectors. And you could find companies that are similar. So for instance, Microsoft, you see that it's, the bulk of this technology infrastructure Square, but there's all these other companies like Adobe, Oracle, and other companies that you could possibly invest in. So say for instance, let's just take this as an example. And as you can see too, the other thing I like about it is that it tells you the overall sentiment of the market today. You see a lot of red and very little green. So it also gives you the just a really pretty picture of how the market performed today. And like I said, everything is red. So anyway, so if you go ahead and double click on the title here, it'll open up this tab right here. That is a stock screener, and basically it will pick up all of those companies that are inside of that same industry. And as you can see, it shows up right here and it's highlighted, which is really good to see. Software infrastructure. So that is where Microsoft was. So one thing I like to do inside of here is go ahead and filter by country. I mean, you can keep it open to, all these different countries if you just want to trade, say you're someplace else and you want to trade different companies that are inside of that country, and go ahead and do that. But right now I'm just going to focus on the United States. So instead of, multiple pages, it did cut it down a little bit. Now we have about 6 pages of companies that we can go to. So one other way that I like to filter this out, sometimes I like to do it by market cap. And if you focus just on mega cap, so that's anything that's 200 billion and above. So that would be your Microsoft. And then there would be just a few other companies like Oracle and Adobe. And in this case, you can also filter down to large companies. That's anything that's 10 billion and above, maybe to 20 billion. And those numbers range depending on what source you're looking at. So I'm not going to do that. I'm just going to keep it at any for this moment. But what I can do in this table is to filter on market cap. Let's see, filter the other way. So that way I have the largest companies. And then another thing I like to do is to filter based on PE ratio. Now, the thing about this tool is not going to keep the market cap stable if you click on another tab, but that's totally okay because I really want to look at companies that have a decent PE ratio. Now, if you're not familiar with what PE ratio is, it is the price to earnings ratio. And basically, it's just telling you how much the market or people are willing to spend per $1 of revenue that the company makes. So if you look at this company here, I've never heard of, but anyway, their PE ratio is 187, and that is incredibly high in comparison to other companies inside of this industry. The next highest one is Square, which is the mobile payments company. It is roughly $120, or at least 120. So that means that people are willing to spend $120 for every $1. So that means that the market truly, believes in this company. And as you also notice that these numbers here are red. So based on the industry average, these PE ratios are very, very high. So what I like to do, I like to filter this way. But at this point, I'm not focused on companies with high PE ratios. Sometimes I do, but when I'm comparing companies, because the PE ratio is a metric that people use in order to value the company. So what is the company's worth? I like to use price to sales ratio because it tells you whether or not the company is undervalued or overvalued. And if you follow Warren Buffett, he is a big fan of looking for undervalued companies. So this price to sales ratio, it basically tells you if the company is overvalued or undervalued in relation to the other companies that are in that industry. And we're not gonna go too deep into that in this video, but if you're just looking for, hey, how do I know what the industry average is for, say, the computer infrastructure type industry, there is this awesome table by New York Stern, the business school, where basically if you just type into Google price to sales ratio by industry, you may get a table that look like this. And if we go all the way down to, okay, software, we get these 3 different ratios right here, this 8.1, and then the highest one is 16.25. But basically, somewhere in there is where these companies should fall in terms of valuating the company. So anyway, that's a whole other video, but let's just focus on this. But basically, I really like using this to discover other companies. So if I wanted a company that didn't have a crazy high PE ratio, maybe this, this may be a good company. And I also like if you hover over the ticker symbol, it'll give you a mini graph. And that mini graph usually goes out about 6 months or so. And I like it basically to give me a quick indication of if that particular market is trending upward or downward or sideways, which is not at all. So this one, it kind of had this drop back in December, and then it's kind of up, and now it's kind of not doing a whole lot. So I don't know if that's a company I want to get into right now. VeriSign, it had this really deep pullback, and then it looks like it's coming up. So I would love to dig more into this later just to see if it's something that I would want to invest in for the long term. F5, it was up and then it had this big drop, so don't know what's happening there. But basically, you just look at these little charts and it'll tell you how the company is trending over the past 6 months. So this company right here, it looks like it hit maybe some all-time highs. I'm not sure, I need to look at the bigger chart, but pretty much, okay, here we go. Oh, and the other thing I like is that it gives you this information about the particular company in terms of technical analysis. Mouth was dry. So anyway, this is a really neat tool, and this is completely free. And earlier I mentioned the price to sales ratio. So here it is right here. It looks relatively low, but I would want to dig into that more because it is relatively low to the rest of the companies in the sector. It's black, so it's not overvalued at this point. But there's some other numbers here that you can dig into. But basically, I just really like using this tool to discover other companies. And then I may do some more digging on my own in order to realize whether or not it's a company I really want to invest in. But if you found this video helpful, go ahead and give this video a like and subscribe to this channel so that way you can be informed when I go ahead and post other videos like this. Okay, so another thing I like to look at when I'm looking at these other companies is whether or not these companies are optionable, which means that you can trade options, or you can do options trading rather, with this particular company, or shortable. And this is really interesting, especially, say for instance, if this trend, wasn't going upward, say if it was going downward, then I can make some money on the down end by shorting the company. But of course, be careful when it comes to shorting because you could owe a lot of money. And typically I wouldn't keep my positions open much longer than maybe a few days. This is not financial advice, of course, but anyway, just something to keep in mind. So, and then when it comes to options trading, we won't talk about what that is or anything, but it's a type of derivative. So basically, there are different things that you can do in order to make money when it comes to options trading without actually owning the stock. So that is another thing that I like to look for when it comes to choosing one of these companies to possibly invest in. And if you're looking for a platform to actually invest on, you can go ahead and sign up with Robinhood. It is one of the easiest platforms I've ever used, especially beginner friendly. And you can find that link in the description bar below in order to get a free stock valued up to $500. All right, see you guys next time.